Risk disclaimer, we know there's risk in trading. Please always use trade capital only. Do not trade with money you cannot afford to lose. Whether it's any stocks, options, futures, forex, cryptos, you know the deal. Social media, make sure you're following the Real Me verified Twitter account at Chris Pulver, youtube.com/Chris Pulver. Let's get to the trading. Want to take a look at all the major indices this morning. Big levels I'm watching in the SPY at 440 and 434. For Delta Trader, I'm looking at a directional play this morning. Bit of a gap fill, but I think we could just make a run. Man, we've got the open levels and the real-time levels are very different, but I think we can make a run to 440. Let's see here. I'm going to level myself in to, let's go to the 5-minute chart. So we have a bit of a gap. I'm looking at levels, like I said, 440 and 434. There's not a lot of economic news this week outside of Jackson Hole. This is the last full week of trading in August before we wrap up the month on the 31st, which is next Thursday. This week, high impact news, PMI numbers out of the Eurozone on Wednesday. US PMI numbers as well on Wednesday. That's all day. BRICS Summit on Wednesday. Thursday, unemployment claims for the US. We start day 1 of Jackson Hole. Friday is day 2 of Jackson Hole, but a pretty big day with high impact news. Jackson Hole is going to incorporate Powell speaking, as well as ECB President Lagarde. So we could have some moving and shaking around the headline times, 10 a.m., 11 a.m. Eastern time on Friday, but for the most part, pretty quiet. Maybe some volatility coming out of the Eurozone with Wednesday. Keep an eye on China. Keep an eye on the indices going into the U.S. market. And I think the play this morning, I'm going to look at a 438. I'm just going to put alert here for Delta Trader. I'm going to look at a 438 this morning. Just looking like an at the money. Let's see what that's costing me. If I did an at the money, can we get to 440? Probably. I could do an at the money at 438. It's going to cost me $1. If I did the 439 and we hit 440, let me double check those levels. 440 I think can get hit. Let's see, the 439 call is 75 cents. I'm going to throw that alert out there. Just give me a second here. So this is going to be for some day trading, Delta Trader, morning assessment, SPY key levels, 440 for bulls and 434 for bears. Uh, 8/21 expiration, 439 long call for 74 cents. It's a 39 delta and going after SPY price target 440. So let me just crunch some numbers here. If I have a 39 delta with about a $1.70 move, $1.70 move times 39, 66 cents. That takes 74. Looking for $1.30 or more credit when if SPY hits 440 price target. So that'd nearly be 100% return on that position. See if we get there. And I'm also considering a butterfly, the 440. I can spread that, kind of pinning price to 440. 434, I can pin that as well. And kind of wait to see late in the day and then get another assessment. On the Qs this morning, any key levels I'm watching on the Qs, real time and open levels have already been hit. Qs might float a little bit higher. If we close above 361, we could have some open space up there. Big levels at 355. I'll keep an eye on that one, but the SPY is just a cleaner read for me this morning. So I'm going to stick to the SPY. And it looks like my chart just shut down. Hang on a second. I'll let this close out and then we'll get into some charts and I'll say good morning to everybody. Okay, let that open up. Okay, so we're at 438.36. I'm looking for price to hit 440. Protect long calls. There we go. Yeah, closing about 437, looking pretty good. 440 should be tapped today. I like that directional play. And just let me get a quick read on the higher time frames. So here's the SPY. Everyone can see the screen, right? Let me make sure when I'm streaming is my chart. Yes. And then I'll jump into YouTube, say hi to everybody. Sorry, I'm scrambling around, but should be good. All right. We are live. Good morning, good morning, good morning. Andrew first in the house. Welcome. And Magpie, Gary, David, Donna, Amazing, Catherine, Gail, Denise, good morning. Don, good morning. Dennis, good morning. Nice to see everybody. Happy Monday. Okay, I'm going to post my Discord channel here. Just give me a second to find that link. Free group chat, invite, and I'll post that in the YouTube chat right there. There we go. So directional play, I like that.
Order filled.
Okay. Looking at about $1.30 on that play. All right, so we have had a pullback. We've been talking about this a lot the last couple of weeks in my Discord channel. Just kind of posted. Let me find that thread from last week when I did my little blog. You know, wrapping things up auto trading wise. Let me check in the. Is it here in the analysis page? I think the analysis thread last week on Friday. Pull this screenshot up. So a couple of scenarios that I'm watching closely for the SPY. We've had about a 5% correction, like 5.75%. I can verify that from the low from Friday last week. We had a gap lower. We flushed up and filled that gap. Now we're kind of trading right around this 438 handle. Levels to watch, like I said, 440 on the upside, 434 on the downside. I'll take a look at the open interest levels for this week. What are the big ones? And see how it plays out. So, a couple of ways that I'm watching the SPY. Qs are similar. Qs have corrected about 7+%, between 7 and 8%. I'm going to bring up my drawing tool and I'll kind of walk through this. So, I was talking to traders last week in the trading rooms about the following. We've had a run up. Obviously, we've had a correction. And so, we have about a week and a half left to trade in August. So, full week of trading, Jackson Hole this week. I don't know if there's going to be any real revelations on where direction's going to go. So I would expect maybe this week and next week, if price stays somewhat quiet inside the yellow box, we'll look to see if there's a post-summer breakout in September. So scenario one is the bulls are just eager to get this party started all over again, and we get above 440 and we retest the highs at 460. I mean, to me, having $20 of upside is pretty bullish from a day-to-day perspective to generate a really nice profit. And if we go back and retest the all-time highs at 470 plus, that'd be pretty awesome. The flip side of that is if the bears are still in control with this big breakout level at 420, we break below 430. I'm looking for a break, and that's a $10 move towards 420. Again, $20 move, $10 move, a lot of good profits to be made in there on the SPY. Whether it's only a couple percent here and there, it still pays us really well when we're looking at some short-term action. And then the other one would be because this is a 1, 2, 3, 4, 5. If that is correct, and we're expecting a 1, 2, 3 wave correction, then we could have a break to the upside first. This scenario, where we have a break to the upside first, that gets the bulls all excited, and then we have another push lower back to 420 where this whole thing started. So I will be watching this closely. Obviously, I want to trade accordingly. If I have a chance to be bullish, I'll be bullish. If we can clear this 446, 447 level, then I think we're heading back up to 460, and I'll just remain bullish. We break to the downside, just continue to put pressure lower. 420 is the big level I'm watching from a 430 to 420 area. So that's kind of covering my big SPY outlook over the next probably 4 to 6 weeks. How aggressive does price get outside of summer? I don't know. I would think that August really has been a pretty volatile month. We've obviously moved a decent amount from our July peak here with FOMC, from roughly 460 highs down to 434. There was some structural damage as far as a trend line break goes. So a break, retest of that trend line and another push lower could still be in the cards for the technical side. We could have maybe a closer to a 7 to 10% correction on the SPY. One thing as far as the bull market goes, usually in a bull market scenario, we have shallow pullbacks. And so my 23%, my 30%, my 38% levels are all right here boxed in yellow. So the bull market to me is pretty safe and secure as long as we don't breach that yellow box. But if we go below that yellow box and we bring in this 420, that's a 50% pullback, and I think that makes it a lot harder for the bulls to justify big time rally, at least for this year. I think that maybe if we don't get back to these highs this year, we might come back and retest them. If it's Q4, late Q4, or even into Q1 of next year, we'll see if the market has enough in it to retest highs and maybe retest all-time highs. I do think that the second half of the year is going to be less about AI and more about sector rotation. I think there's going to be some energy plays, probably some dividend stocks, some value plays. I think that AI has had, for the most part, a pretty big rally that might be calling it quits. So I'll keep an eye on it, watching everything closely, of course. 437 big level today as well on the SPY. All right, so I'm going to keep an eye on everything today. Price to the downside. Got a couple of butterflies I'm looking at. All right, let's get back to some charts. Get me back to the chat. Say hi to everybody. Morning, Ranjit. Morning, Angela. All right, so that's what I'm looking for in the SPY. Qs, let me go to the higher time frame here as well. So Qs have gapped. They're pushing a little bit higher. Chart alarm's going off this morning. What is it? SPY 438. Yeah, it's late to the party there, chart alarm. Let me go to a 1 hour time frame. Okay, so we're gapping, hanging. Let's see what price does this morning. If we just come back and retest like 437 and then make a run to 440 this morning with a little bit of bullish upside, I'll figure it out. Let's take a look at some dollar index and US dollar index on the higher time frame. Clean up the charts. I'll go back to the SPY in this one and go to my other charts. So that's my SPY. There's my 1 hour. Keep an eye on the time frames with a bunch of chart alarms. Go back to this chart. Go to DXY. There we go. Okay, so DXY, what I'm seeing here is a wedge and a couple levels that we like. If this is a rejection for the DXY, a couple trades we took in the flex trading room, I did Aussie dollar long and New Zealand dollar long. They were broadening patterns. And let me see how those are looking right now. Looking to see if I started to buy it already. I think we bought it around 64.60 or so. So we're starting to level in. There might be a big demand level down here around 62.50. So we got a couple levels in, and then the round number at 6,000. If this is just a bigger channel, 6,000 is a nice round number. We have our COVID crash low at 56. I don't see the Aussie dollar coming down that low. So I think it's just more of a range trade. The broadening pattern is pretty solid, where you have support, support, support making lower lows. You have resistance, resistance. This one was a little tricky though. It made an equal high. So what I'm looking for is this. If we hold these levels and we push back up into the midpoint here, 66 to 66.50 looking for profit. That should give me, if I'm only filled on one trade, that's going to give me about, let's see, 150 to 200 pips of profit on the Aussie dollar. The New Zealand dollar, similar. Similar with this type of structure. So watching this level here, if we come in and find support, we could have equal highs here or just couple of horizontal levels. So, here's my swing on the New Zealand US dollar. I'm looking to see if we can get this area to bounce. Okay, so a trade here around, I think we got in right around 6,000 or so. We're looking to get back to around 6,200, take some profit on the Kiwi dollar, looking for dollar weakness. A couple levels I'm looking at on the DXY and US dollar. If I'm right with this wedge, we should be looking for dollar weakness. If we're going to see a rally in the stock market, we should be looking for dollar weakness. If we look at the dollar index here with FXCM, we're sitting at horizontal levels that could also act as pretty nice resistance right in here. So resistance levels, dollar drops. If we're going to have risk on trading, it makes sense that the dollar is going to get it. I would like to take a quick look at the some of the bonds, the 3-year, so U.S. 3-month. I meant 3-month. So the 3-month still trading at 5.29. The 10-year 5.29 versus 4.34, nearly a 1% inverted yield curve from the 3-month to the 10-year. 4.3 versus a 2-year at 4.98, so a 0.7, 0.75 inverted yield curve. Rates have not gone higher, right? So you look at the 2-year, we're still sitting here right around 5%. The 10 years around 4.25, 4.33. The 3-month continues to be the dominating, short-term treasury yields, 5.29. Pretty crazy stuff. So, I mean, lots and lots of stalling right now. The Fed funds rate staying right around 5.5%. The Fed's expected to pause for the rest of the year. We keep watching that Fed watch tool. Let me go back to, let's go oil next. If I go into the CME watch tool, so September's meeting is expected to be a pause still. November is potentially the highest probability of maybe another hike. We will have inflation data coming in September and October. November is going to be another rate decision. Right now, the probability is still a pause. So this is potentially the month that the Fed might consider raising. December is pretty much high probability. Well, I guess it's about the same, November or December. If the Fed's going to throw out another 25 basis points, it's coming November, December, likely not in September. Rate cuts, however, are forecasted for May, not for March. Okay, highest probability in March is we're still going to stay at the same rate we're at right now. May, looking like a potential 25 basis points cut. June, possibly another cut. So starting some cut cycles here to get us down maybe 1%. From this area, May to December, maybe a 1% drop in the Fed funds rate. Does something break between now and then? I don't know. Possibly not. The one thing we're going to have to look for, if you want to see the Fed cutting, I don't think they're going to be very vocal about it, but if the Fed's going to cut, we need to see job losses. Period. We need to see that with unemployment claims going up, and we need to see that with non-farm payroll missing forecasts, and we need to see that with unemployment rate going up. If that starts to happen, the talk of recession gets more realistic, and that's probably where the Fed starts to discuss cutting rates. Cycle-wise, I mean, recessions can take anywhere from 6 to 18 months from these, major indicators like the 3 and 10 month inverted yield curve and the 2 and 10-year inverted yield curve. But bottom line is the U.S. needs to see job losses. The labor market's still way too tight. Things are still pretty darn resilient. So if we start to see job losses, that gets closer to the real recession talk and possibly sparking the Fed to start looking at cutting rates. So we'll find out. Okay. All right, so that's Fed stuff. Jackson Hole this week. Let's go oil. Oil sitting at $80. I think it's pretty well supported. We might pull back to the 200 EMA at 78. We might pull back to around 75. I still like buying dips. So 78, look for a dip. 75, look for a dip. I still like long on oil, back towards $90 to $95. That could be nice. A couple of things. If we have a dollar that's weaker and we see oil being pretty resilient, expect to see a nice little rally in oil and commodities. So oil could go back up, gold and silver could go back up. Commodities in general with the broader, commodity-based indices could go up. So I'll be watching instruments like that. Gold and silver. Gold came down to make a fresh low. Again, correction-wise, look at something like this: high, low, lower high, lower low. We could settle in on gold to around 1850. 1840 is a good spot to pick up some more gold. If we have some levels down at 1700 or lower, I am definitely a gold bull. I would be buying gold pretty aggressively down there around 1700 or 1650. Silver looks a little bit better to me, holding channel highs or channel support rather, 2250 to $22. Looking to see if that level holds and stays in this little bull market. Bitcoin had a rough week last week with headlines from Tesla and SpaceX selling some of the holdings. I said this is kind of a make or break scenario. We break, we flag, look out below. We break and we immediately come back up, and I'd say that has to happen maybe this week or next week. If we push back up towards 28 or 29,000, then we could have Bitcoin back above the 200 EMA and then coming back up, maybe still not getting above 32. But this is a bit of a concern. We had a lot of indecision, a lot of boring action, very few chart alarms going off, and all of a sudden we had a big drop from 29 down to 26. So that is a pretty significant drop. If there's more coming, then we're probably dropping back down towards 20,000. So, longer term, that's totally fine. I'll probably still take another chunk of Bitcoin at 20,000. Longer term, I'm just going to hold. But if I'm looking for levels to buy, 20K is certainly a level I'm interested in buying. Okay. All right, let's take a look at some currencies. Directionally, I'll go through my directions. Aussie CAD, I'm bullish. Aussie Swiss, I'm bullish. Still looking to see, do we get a bottom here in August? Possibly, but probably not. The Swiss National Bank is coming out with a rate decision in September. I don't think we have anything forecasted for that other than I'm liking the idea that there might be a pause from the Swiss National Bank. Inflation by country for Switzerland is less than right here. Their last year over year was 1.6 and 1.6, and they're currently with a rate of 1.75, I believe. So let me look at cbrates.com, check that official cash rate. Switzerland is 1.75. So they're technically, for a country that likes to be neutral on everything, I'm curious if that's considered neutral. I'm considered that's considered restrictive. They went from negative 0.75% to 1.6. So that's a pretty big swing. And, staying ahead of inflation numbers, if inflation continues to improve, perhaps the Swiss National Bank will pause, no longer be looking to raise rates. Meanwhile, the United Kingdom will probably still raise rates and possibly get to 6% later this year or into next year. The Eurozone, same thing. They're sitting just over 4%. We go back to the Eurozone here. Eurozone's at 4.25, and their year-over-year inflation print was 5.3. So most likely they're going to have to see improved data on the inflation front, probably raising rates to 5%, get it back to neutral, get it back to restrictive, and the same thing is true. Okay, never mind. Hang on. I got a 438. All right, let me edit this. 438, remove. That was an alert that I set last week that was triggering like every minute. So I don't need that to happen. Open-ended only once. Okay. I want all my chart alarms now just to be only once. Only one is needed. Let's see if we can push up towards 439, 440 today on the SPY. Does that make sense on the inflation stuff? So UK and Eurozone expecting to continue to raise a little bit. RBNZ came out with a I want to say pause, but a hawkish press conference. Was that last week? So they paused at 5.5, but had a hawkish tone. We did take a short on the Aussie New Zealand. And so far, it's still kind of directionless. But we're going to look to see if we can fill some pockets down here with this news level at 106. Aussie dollar, like I said earlier, I'm looking at a broadening pattern. I'm looking to buy low. I'm scooping up some dollar cost averaging on the Aussie dollar. CAD Swiss, I'm looking for a bottom to form. This, to me, is one of my favorite trades lining up for the year. If we have a falling wedge or we just have a bottom that's going to start rallying back up here, this is a pretty fantastic level. And if we get a 5-wave move, we're talking about profits from, currently trading at 66 up to 72 to 7,300. That's a 500 or 600 pip move with positive swap. So I would love to see a lot of trades with the Swiss involved, with Swiss weakness and commodity pairs doing better. And we'll see how this takes shape. China really quickly. Hang Seng is down once again. Asia's having a rough go. I still think technically this is setting up for a pretty fantastic head and shoulders if we see a very aggressive turn. I don't know if that turn's going to come on a dime. I don't know if that turn's going to have to be a V bottom, but I'll be watching for that. Otherwise, China might see enough downside that we just have a bargain on the Hang Seng Index at 15,000. So that brings me to, and it's not a ton of exposure, but if I'm looking at HSI, I'm looking at K-Web. That is a tech ETF. I think it's a tech ETF, or it's just large cap tech. KWeb is yeah, it's large cap tech. This one's actually hanging in there better than the actual Hang Seng Index. The Shenzhen Composite, looking for that. I just think it's going to be a tough go right now. I listened to a lot of content this weekend, and the equivalent position of where China's at right now is potentially the same that the U.S. was back in like 2009, 2010. Kind of recession, kind of crisis, kind of in a bit of a pickle with where the population's at, where there's some distrust in the government. Government's trying to obviously stimulate, get out of a deflationary spiral, and also try to lift animal spirits, and that could be a tough thing. So it's the one central bank right now that's pretty dovish and accommodative, which is kind of interesting considering the rest of the world is now just finally getting to the point where they're still raising rates, some are, and some are pausing officially. So to then start going, maybe China's just too early. So anyway, summary on that is this is what I'm watching. HSI, if we come back down to a double bottom, I love this at 15,000 to 14.5. Stocks I'm watching, KWeb right in here, Alibaba as well, just really good technical patterns, like crowns and head and shoulders all over the place. A big range on Alibaba. If we have a double bottom at 61, a couple things I'm going to look at this week for equities on demand. We might end up doing somewhere down here. If we get an $80 level, I might look at a long call that's out like a year or two. I might just look at a leap, 1 or 2 year long call, set it at 80, maybe go 10 strikes out of the money, doing 90 or 100, and just set it out there. Let's see how cheap we can make this. We're gonna have to pay for a lot of time, but I do think that technically, if we have $62 levels, we could come back up to 100 plus. I mean, that call could be super valuable. If we have 80 plus levels that go to 140, that call could be super valuable. And obviously, unless you've got 10 grand you want to allocate to 100 shares, which I don't want to necessarily. I don't want that type of exposure. I'd rather just play options. But Alibaba and Baidu both, watching those closely. Okay, so we'll watch the levels and equities on demand, but really good technical patterns, head and shoulders, all that good stuff. So I think that's probably it for my China exposure. There's an index to watch, keep an eye on it, but a couple of stocks, KWeb, Baidu, Baba. That's about it. I'm not trading like Didi or anything like that. That's essentially the Uber of China. I'm not trading Wish, which is ecom. I'm just focused on some of the bigger, like essentially it's the Google and Amazon of China is what I'm trading. So I feel like that's pretty safe overall. Companies that make a lot of money and have limited debt, good cash flow. Okay, so that's that. It's 10 o'clock. I'm gonna have to switch gears here to equities on demand. There's a big event we've got going on for market traders. I can post the alerts. I think we had a bunch of these posted. Equities on demand right in here. I saw the notifications go out on Telegram. Here we go. So for those of you that have access to Smart Trader, I can post this in YouTube if it works. You can. This is free for anybody. So if you'd like, we're doing an all-day event at Market Traders, MTI all-day event. It's just for today. It's from now until 2 p.m. Eastern Time. My segment will be 12 noon Eastern Time, and then we'll do a roundtable from 1 to 2 with the other analysts and myself. So there's the link for it. You should, if you have an account in Smart Trader, even if it's a free demo account, it should work to get into the trading room. If it doesn't, let me know. Hopefully that takes care of it, though. That is, I know that we're doing this kind of free for everybody. So it'd be nice to see some familiar names and faces, and be a lot of fun. Learn a lot. Good team of analysts, and a lot to discuss. Okay, so equities on demand students. I'll switch gears in the trading rooms. Everyone here from the Discord thread, stay active in the chat. I'll post what I can this week. We'll be active in the trading rooms. Let's have a good week in trading for Forex. Have a good week in trading stocks and options. And I will see you all soon. All right, let's have a good week, everybody. Talk to you soon. Bye. Thanks. Bye.